Welcome to day 2 of Accounting Essentials, Master the Basics in 10 days. Today we're going to go over the accounting equation, so make sure you grab your flashcards and have your pen ready because you're going to want to come and revisit this. Now the accounting equation is a powerful but simple equation used in accounting all the time. So what is the accounting equation? It's a formula that shows what a company owns versus what a company owes. So write that down. Owns versus owes. So what is the formula? It's assets equals liabilities plus owner's equity. And this formula actually mirrors the balance sheet of a company. And today we're going to look at Ulta Beauty's balance sheet. Just Google Ulta Beauty 10K, click on the consolidated financial statements in the table of contents and bring up the balance sheet. Now the assets section is what the company owns, and they're listed in order of liquidity, meaning how quickly can we convert these items that we own to cash. So some examples of assets are things like cash and cash equivalents, receivables, prepaid expenses, property and equipment, goodwill, and deferred compensation. Moving down to the liability section on Ulta's balance sheet. And some examples of liabilities are accounts payable, accrued liabilities, deferred revenue, current operating lease, liabilities, and deferred rent. And finally, the equity section of Ulta Beauty's balance sheet. The equity section lists things like common stock, treasury stock, additional paid-in capital, and retained earnings. Now, the accounting equation must always be in balance. And the great thing about that is when you're an accountant and preparing a balance sheet, you will be able to plug this formula in, and in case if your balance sheet doesn't balance, you'll be able to go in at that time and figure out what is driving your variance. And to recap, assets equals liabilities plus owner's equity. Assets are what the company owns, liabilities are what the company owes, and the equity section is what the company owes its shareholder. So time to go over an example. You start your own hair business, Glamour Hair, and you take $1,000 of your own hard-earned cash and you put it into your business. So what do you record for the transactions? So you'll record $1,000 in cash. Cash rolls up to assets, and then you'll have $1,000 in equity, and equity rolls up to the equity section of the balance sheet. And as you can see, $1,000 in cash equals $1,000 in equity. The accounting equation is in balance. So since you need a computer to get started with this hair salon business, so you walk into Apple Computers, but you don't have enough money to buy a computer today, so you purchase it on account. You get a beautiful iMac for $3,000. So you record the transaction to $3,000 to computer. A computer is an asset, so you'll classify that in the assets section of the balance sheet. And because you owe somebody else $3,000, that's an accounts payable, which is a liability. And as you can see, $3,000 in computer equals $3,000 in accounts payable. So now you're ready to start doing hair, but you don't have the curling wand that you need for this next appointment, and it's a $500 curling wand, but you don't want to take out any more credit card debt. So what do? You purchase the curling wand, which is an asset, and then you credit cash, meaning cash left the building. Since these are both asset items, there's nothing to record on the liability or equity section of the accounting equation. And remember, the accounting equation must always be in balance. And if it's not, you need to investigate the variance. So you made it to the knowledge check. What does the accounting equation represent, and what are its 3 main components? A, it represents business profits and losses. B, it represents assets, liabilities, and equity. Or C, it represents expenses, revenue, and income. B, it represents assets, liabilities, and equity. And if you didn't get that correct, I think you need to spend some time rewatching this video, and that's okay. And if you haven't picked up Accounting Essentials, Master the Basics in 10 days, I'll leave it in the link below. And see you back for day 3.